morning, Missouri. Good afternoon, 13th of March, 2016. Just a quick look at the charts. So technically speaking, just from a price chart perspective, there's lots of different technicals to look at. But I tell you, folks, the recent action in the market is pretty encouraging. Here's my one-year chart of the S&P. Notice that we have these down trend lines, these downward sloping trend lines, and I guarantee you lots of technicians have drawn these lines on their charts. This one could have been resistance, and it still may be, but Friday we closed just above it. So if this momentum continues, this can become support and we can continue to move to higher highs. There has to be lots of talk in the technical community, I guess there is such a place, about the fact that the S&P 500 on Friday closed above its 200-day moving average. That's the yellow line. First time has done that since December. Now, obviously, this doesn't always mean bullish things because it did in December when it came down and we had quite the correction. But often, that's a signal that this market is, in this case, the S&P, is gaining momentum and could very well test the May all-time high in the not too distant future. I am offering no guarantees. I still think with the headwinds of, central bank policy, uncertainty there, uncertainty over China and other things, and whether or not the recent rally in oil really has life to it, there's some major headwinds in the market that could bring us down easily and even to new lows at some point. But I would have to tell you from a technical perspective, the chart is looking pretty encouraging, and there's some other supporting data that I won't, technical data that I won't bore you with here. Let's just close by looking at the 60-day chart. I have been talking to you a lot the last few days about the importance of this upward sloping wedge pattern and how on a near-term basis it would be bearish, and the likelihood is that we break below it, and we did. You see, we hit that resistance and then came right through that trend line and broke it and actually came down lower. And I'm sure some are drawing trend lines down here, or they started to, but then we bounced and found real support right at this 62% retracement from the 1229 high. And then it kind of exploded through that. Now it's very, very common, very usual that was previously a support line becomes a resistance line, and I have not moved this. So that's absolutely how this looks. Looks like we came back up, and technicians or the computer programs that are programmed to sell at certain times found resistance right on that trend line, and we'll see if we continue to climb along that. Certainly not a bad thing for the bulls, because that's a pretty steep trend line right there. So but we could also break back into this and move up and then look at this as resistance too, but then we're still in that negative sloping wedge pattern. So we'll see, and I'll be drawing new lines in the days to come. We'll see how that looks. I want to go back to the one-year chart because it just dawned on me. I forgot to show you something. This retracement maybe has more meaning because we go back to the all-time high back in May and we come down and trace it to the recent low. This, I told you recently, this 2010 is very important to technicians. You can see how it was support for a while. It was resistance just a little bit. It was resistance here, resistance here. Well, we broke through that pretty substantially, or at least aggressively, with real big momentum. You can see we closed right at the high. So not only are we above the 200-day moving average, we're also above that key 2010, which was a 62% retracement from this May high. So folks, I know I'm getting really deep into the weeds with the technicals. My goal here, as I keep reminding you, is not to propose that this is something actionable that you and I should pay attention to and trade on. We're not traders, we're investors. But I have found that with clients, the more I can help them understand that there are forces that move markets around on a short-term basis, that not that they don't have to do with the fundamentals. Basically, what these technicals tell you right now is that there may be some strengthening fundamentals, but it's that intraday volatility that doesn't make sense at times. A lot of times it's purely just the technicals. It's bumping up against resistance or down against support and so on. And then it's triggering big trades by big institutions as well as individuals. So I'll leave it there. Hope you have a great rest of the weekend, folks. And of course, I'll be back lots in the coming week. We've got the Fed meeting, we've got the Bank of Japan, and we've got lots of stuff to look at in terms of economic indicators as well. Have a good one. Bye-bye.